No one knows the exact moment it happens. The screens still glow green, the markets hum, and then silence. That's the sound of a system built on $400 trillion unraveling. You don't see it in one explosion. You feel it in slow motion, in the rent that doubles, the pension that vanishes, the dollar that buys less with every sunrise. America isn't running out of money, it's running out of time and faith. Because behind the polished speeches and trading floors lies a secret math problem no one can solve. Every dollar in existence is owed to someone, somewhere. Every promise is stacked on another, higher promise. $400 trillion of "we'll pay it later." Later is now. And when the world's most powerful economy admits it can't keep its own promises, what happens next? For decades, America has treated debt like oxygen, invisible, essential, and infinite. Every crisis was solved by borrowing. Every promise was financed by tomorrow. But what happens when tomorrow finally shows up? Right now, in 2026, the US government officially owes more than $36 trillion. But that number, the one you see on headlines, is just the visible tip. The real total, when you include everything already promised, pensions, social programs, corporate leverage, private credit, soars past $400 trillion. It's a number so large that even economists stop pretending to measure it. They just call it unfunded obligations, which is a polite way of saying money that doesn't exist yet. We're not watching a debt problem grow, we're living inside one that's already matured. The American dream, mortgages, 401ks, student loans, all depend on one fragile assumption, that growth will always outrun debt. But what if it no longer does? To understand how we got here, we have to go back, not decades, but half a century. 1971. President Nixon unties the dollar from gold. For the first time in human history, the world's reserve currency isn't backed by anything physical. It's backed by trust. That single decision rewired the global economy. Money became belief, debt became liquidity, and America discovered the secret weapon of modern finance, printing prosperity. The more it borrowed, the richer it appeared. Banks learned to multiply credit. Corporations learned to leverage profits. Politicians learned that voters never punish spending, only cuts. Debt became culture. Then came the 1980s, deregulation, Wall Street innovation, the invention of financial products that no one outside a trading floor could understand. It worked until it didn't. 2008 was the warning shot. A global financial system collapsing under the weight of its own promises. But instead of fixing the root problem, the world doubled down. The cure for too much debt turned out to be more debt. Here's where the math gets brutal. The US collects around $5 trillion in taxes every year. It spends almost $7 trillion. That's a $2 trillion shortfall before new projects, emergencies, or wars even start. Now add the long promises. $80 trillion for Social Security. $100 trillion for Medicare and Medicaid. $30 trillion for public and private pensions. $20 trillion in corporate debt. $17 trillion in household loans and credit. Every one of these numbers represents a bill waiting to be paid, with money that hasn't been earned yet. And even worse, the system only stays stable if the debt keeps growing. If it stops growing, it falls apart. That's why inflation isn't random, it's intentional. Printing more money to make old debts look smaller is the quiet trick holding everything together. But every trick has an expiration date. Let me ask you something. Can you imagine a global economy operating with no trust left in its own currency? Drop your thoughts in the comments, because that question isn't just academic, it's existential. And if you're watching this far, you think differently from the usual news scroll crowd. Subscribe, not for predictions, but because we're going deeper. The next few minutes reveal where the first cracks are already forming. Right now, the US government pays over $1 trillion a year just in interest. That's more than it spends on its military. Interest, invisible, compounding, unstoppable, has become the largest line item in the national budget. The Federal Reserve is cornered. If it cuts rates, inflation returns with a vengeance. If it raises them, the cost of servicing debt becomes unbearable. Either way, faith in the system erodes. Foreign investors are starting to hesitate. China trims its treasury holdings. Global trade experiments with non-dollar settlements. You can almost hear the quiet question echoing through boardrooms worldwide. What if America isn't the safe bet anymore? When your reserve currency starts losing trust, it's not a financial story. It's a power story. Meanwhile, on the ground, the effects are everywhere. Rent rising faster than wages. Groceries up 40% in 5 years. Retirement plans shrinking even as stock markets hit record highs. How can both be true? Because inflation makes everything look bigger, even when value shrinks. Corporations take cheap credit and buy back their own shares. Politicians approve trillion-dollar spending packages and call it stimulus. Consumers swipe cards to stay afloat. It's theatre, the illusion of prosperity staged on borrowed time. And the audience? Us. History warns us what happens when debt outpaces reality. Rome financed its empire with debased silver. Britain financed wars with bonds it couldn't repay. Every empire believes it's different, until the math says otherwise. The US may not fall in flames. Its decline might instead look eerily peaceful. A steady erosion through inflation, a gradual loss of global influence, a gentle revaluation of what a dollar truly means. Some call that a soft default, others a reset. A more technological twist looms. Central bank digital currencies, programmable dollars, algorithmic fiscal controls. These might buy time, or tighten control, but they won't erase the underlying truth. The numbers don't add up anymore. So where does this leave us? In a world where debt is permanent and money is an illusion of future labor. Every paycheck, every savings account, every investment statement is tied to a promise that someone else will keep working, paying, and believing. It's a delicate web of faith masquerading as finance. The real danger isn't the crash. It's the slow normalization of a system that only survives through constant expansion, no matter the cost. Maybe the $400 trillion crisis isn't coming. Maybe it's already here, disguised as everyday life. Each swipe, each loan application, each government package is another whisper from the future saying, "You still believe, don't you?" And we nod, because the alternative is too frightening to face. But when credibility finally cracks, when the world's trust in the US dollar truly shakes, the meltdown won't begin with chaos. It'll begin with doubt. And from there, even the strongest empire has no defense. Because when money itself becomes the problem, there's nowhere left to hide inside the system that created it. The $400 trillion question isn't when America's debt will explode. It's who will still believe in the dollar when it does. Thanks for watching. See you in next video. Don't forget to like, share, subscribe.